Hey, YouTube. What's happening? Hope you're doing well. Hope your trading's going well. Just going to do a quick analysis on Bitcoin, where it's at, where it's going, and try to identify some patterns and get some insight as to maybe where the next pivot will be or consolidation point um, to find possible action points for placing trades. And as usual, we're going to go macro to micro. So here we are on the monthly. And I don't know if you saw my last video on this, but it's doing basically what we figured it would. It's going downside still. The markets in general, due to COVID and the Federal Reserve propping up the markets by printing cash and such, which is what caused the massive inflation going on right now. But um, basically they were buying up assets, and so the market's like way overvalued. So now everything's going back to value, which is why you have such a huge correction going on across the board because it's propped up on cheap money, and it's not real, true economic growth. GDP, real economic growth, is always adjusted down for inflation. They take the inflation out because it's not real. It's not real activity. It's not real business activity. It's not people getting up, going to work, producing goods and services, and collecting a profit margin on top of the expenses to do that work. It's just let's print some money and buy this or whatever. It's artificially inflating the economic numbers, and so the Federal Reserve's job is to balance it out, supply and demand, up and down, up and down, up and down. And so interest rates and such go up and down, and money printing go up and down, etc. And so you get these ebbs and flows in the market because the big money, the institutions, the investment banks, mutual funds, etc., they trade based on that because they have regulations, they have massive amounts of money to manage, and so they have to know based on the real economy, etc., what to do with their money. Whereas, retail traders like you and I, we can just kind of. That's the one advantage that we have. We can just kind of get in and out of the market whenever and wherever. We have a much easier time managing risk. We can put a stop loss like real quick. Um, it's different for big money because they're regulated. So that is why they always try to buy low, sell high, etc. You're not going to see them day trading. You're not going to see them swing trading. Okay, when the market dives and it goes under value, then they know, okay, this is where we invest. Because over time, the Federal Reserve's going to have to flip the script. Inflation will go up, the value will go up, even if it's artificially. And then we can sell for a gain. So now, moving back to Bitcoin, like Bitcoin, okay, it's not like a traditional equity. It's more like a currency or like a gold. It's kind of like a hybrid. I mean, gold technically is legal tender, the only real legal tender. But anyway, in terms of like securities and the way that the security behaves, Bitcoin and other cryptocurrencies are different because there's no underlying business. There's no underlying activity of people getting up, going to work, producing goods and services, and then collecting a profit margin, like 10% above expenses or whatever. And so it's way more volatile. As you can see here in the ADX indicator, volatility has never left. Looking at the macro, never. So, knowing that, you're going to especially be on alert and having very solid risk management. You can always buy back in. See, these moves are so large and volatile. Just cut losses and buy back in. You can still make plenty of money. So, just looking at that on that note, looking at these moves, you can look at this indicator here, which is mainly for momentum. It's kind of a somebody's customized version of a squeeze indicator, which was created by John Carter. So um, this is custom made, possibly slightly different, but the original intellectual property of that idea, I suppose, would go to John Carter. And so definitely go check out his website and his company, Simpler Trading. He's got free videos on YouTube. He often does like free quick videos of like his pick for the week or whatever. And he uses his various indicators and shows you kind of why and talks about the markets or whatever. It's good stuff. So definitely check that out. But as far as this is a little bit different. I think mostly the momentum bars here, these are momentum bars. So the light green means it's like going up, increasing. Then you have blue, which means, okay, it's decreasing, but the bias is still bullish. And then you have red, which is bearish. And then yellow, which is bearish, but decreasing momentum downside. So sell pressure is decreasing. And you can kind of use it to confirm tops and bottoms or various pivot points. Like here you see the correction here. You've got two bars. So once you see this move, right, when you see a move like this, 4 to 8 bars, like continually higher, closing higher, that is a wave. That is a move, right? And if you trade Fibonacci or Elliott, you know it's typically from 1 degree to the next. So let's say, you know, price action here is hovering around 50% Fibonacci level. Then all of a sudden you get some market participants who say, yeah, the value is worth way more. So they start buying, everybody starts buying. And now it goes up to the 38% degree. Okay, Fibonacci, those levels, those are degrees. So it's moved up to the 38 degree, and then look at this, it comes back 50%, and then it goes forward. That's called a halfway back. It's a 50% retracement, and then a continuation, and then it tops out again. So you can't really use this alone because it'll be too confusing. Like if you were to use it here and you see the blue, you think it's going to reverse. Because typically when you see the first blue, that's kind of like a caution. Like, hey, the move's slowing, so a pivot's near. Swing high or low or what have you, and it might reverse. In this case, it didn't though, so it's like you've got to be very. It depends on where you got in and what you're trying to do. So if you hadn't gotten in yet, and then you're watching here, and you see this blue, you gotta. There's no way from just this indicator to know whether to go long or short. Like if you're gonna do that, it's kind of like gambling. You might as well just go real tight stop loss, if not zero loss, and just start throwing darts. Like, you know, you could even do one long, one short, and once you kind of really know, You cut the loser short real quick and let some people do that. I prefer to use confirmations, and then I'll analyze each time frame and just get a better sense of what's going on each time frame, because these trades being placed, these are fractals, so these trades are going to be identical on all time frames. It's just you get, on the weekly, this monthly bar is going to be split into four smaller bars, so you can see patterns better on the lower time frames, um, which just helps you with timing, etc., a little bit better. But this gives you an overall. So as you can see, just a lot of decreasing bullish, and now you're going red. Well, that's really not good. So what does that mean? You got a red bar and a red dot. The red dot means squeeze, so very tight consolidation, which isn't bad, but that means it's so tight that eventually it's going to have to explode, and then once it does, you'll see it'll go white. These green bars means it's increasing volatility. So as you can see, like it was green for a long time. It was very volatile for a long time, and that's when the major moves happened. So that kind of gives you some insight. But this is not a good sign for bullish, that's for sure. It is a signal that something might happen soon, though. And it looks like this wick here is filling. Like it's just going down. But what I like to do is use confirmation, so I look at everything in context. This is decreasing. This is very tight consolidation. There is volatility in the market. There isn't a very strong directional bias. However, they're very close, which means once this super tight consolidation ends and it has to break out one direction or another, one of these will pop up. One of these will reveal which way. And then hopefully the CCI down here tells the same story. It does the same thing. So if this bullish pops, you want to see the CCI break upside out of the blue. You want to see teal bars coming up and getting bigger, just like back here on this move. And so then you have various confirmations, different indicators for different reasons: volatility, momentum, historical average price / cash flow. They're all telling you the same story, which means the move is legit. As in, you can rely on the data and place a trade with a high probability that it will be successful. And that's what you want, ideally. Those are the trades you want to take. If you don't have that situation, you just don't trade. It's just you're gonna lose your money most likely. So now here you can see better 6-bar squeeze. Then it popped, and now volatility. I mean, it wasn't much of a move though. You see, there's just no volatility in the market on the weekly. That's why. So it's a weak move. It's probably not going to go anywhere too far. Um, the CCI is below the blue, like it broke out. It broke out here, which makes sense. You have a 2-bar, what's called a 2-bar confirmation. A strong move, and then another close lower than this entire range. Not the close, but the range. And so it's not really doing much, so it's like, how much farther is it going to go down? Well, considering the CCI is like not too much lower than this point here, but price action is lower, that tells me that's somewhat of a negative confirmation. Like price here is considerably lower than this past pivot low, yet the CCI isn't much lower, although it looks like it's starting to go lower. But since CCI it does incorporate historical average price, it should be lower. And when it's not, it's called a negative confirmation, and that is typically indicative of bottoming, a reversal. Like the entire move is ending. And as you can see, that kind of makes sense. You've got a couple waves here. Here's a corrective wave, A, B, C. Then you've got like a bottoming consolidation pattern. This is a descending triangle. And then it tries to break out and fails, and then slams against you. Nothing weird there or unusual. That all kind of makes sense. So where do we go from here? Look at this. So you look at this. This is the pivot point we were just talking about, the prior one. Looks like it hit support here, and now price has broken support, and now as you can see it is moving sideways, but it's doing so below prior support. So support has now become resistance. You have a very long squeeze. You have a very strong bearish directional bias on the daily that is increasing, and the CCI is breaking out lower, and price action's going down a little bit. So it's very easy and reasonable to estimate that when this breaks out, it's more likely than not going to continue downside. And so the idea behind all this is consolidation's going on very tightly, which means volatility is low, which means generally on other securities. I'm not sure if you can buy options on Bitcoin, but if you play options, when the volatility is low, the prices are considerably cheaper. So you can get them very cheap. And when the consolidation ends and the breakout happens, hopefully it's in your direction and you can make a lot of money. That'll get you in the trade early. But it's a directional play, so you have to guess right. Now you could go less risky and wait for the breakout for a 2-bar confirmation and then place the trade. That's supposed to be less risky, but oftentimes the move can come back. Like it'll break out in a 2-bar, then maybe another bar, and then it comes back to breakout price because people are hedging their positions. And then once they hedge safely or whatever, it's very possible and likely that it continues back the way it was supposed to go in the first place. Once everybody completes their hedging and protects their capital, and then they all say, oh, okay, it wants to go downside, not upside. We've hedged our position, got our capital back with minimal losses. Now we'll go downside, and so then the move really kicks off because all the market participants are now like, okay, it wants to go downside, I'm cool with that, and then they're in agreement, and so it just sparks a move. And then here's the 4-hour. I always like to go down one more just to kind of get an idea, but as you can see, it just gives you a lot more detail. You can see clearly here it breaks through support. It's now resistance. Resistance is actually lower. It's like right here at 32 100-ish. And it keeps poking at it. It's poked at it, what, once, twice, 3 times here. All the rest here, these are consolidation patterns, and they're failing to go back upside, which isn't a good sign. So we'll see what happens, but everything right now hasn't changed from my last video. It's still a bearish situation. I mean, this is very bearish. Price action is closing below support here. So, The CCI just broke out, so like now is really the time. You've got here. Let's open. Let's get this larger so you can see it. I'll just wrap it up real quick. But as you can see, price actions closing. You've got a 2-bar confirmation here, and there's some battle here going on. But with the CCI breaking down out of the blue, that is your action point. That is your signal. You have tight consolidation, and you can see that the ADX, the directional indexes, are splitting apart. The bearish is getting stronger, going upside, kind of breaking up. So, time to go short. If it doesn't move to the next lower degree, who cares? Your stop should be very tight on these. Very tight. If not, break even, no loss. But that's on you to decide how much loss you're willing to accept. But this is very bearish. And so my guess, my forecast, which could be wrong, things could change. Volatility means market participants come in the market all of a sudden, and they have enough power and influence and money to move the market in any direction they want, and it could be totally the opposite way of you. So forecasting should not be relied heavily upon, just used as a reasonable estimation with proper risk management. But this suggests either bottoming or preparing for a move to the next lower degree downside. So anyway, that's it. We'll see what happens. I hope you found this helpful. Leave a like, subscribe. Definitely leave comments. The main purpose of this channel is to facilitate discussion, so love to hear your thoughts on the markets, my analysis, and if you have your own analysis, that'd be cool to hear too. All right, well, take care and good luck with your trading.